Well, hey, everybody, welcome to the Closing Beat. Happy Monday to you. How you doing out there? I see that I've gotten you guys all started on the political stuff out there. Get you fired up. You know, the more you chat, the more it thinks you guys are interested. So our videos do better, and we make like 18 cents off of these videos instead of 16. So have at it. There you go. Political season. Yes, me and Eric are campaigning for clients. Are we playing that today? At the end of the show, I will play my commercial to hopefully jostle you into, working with us here at Jazz. But we are officially campaigning for clients, and we got all kinds of ideas where to take this. We are financial advisors here at Jazz Wealth, financial advisors for people who don't think they can have one. Not just retirement, but everything that touches your dough. Happy to help with that. Also, we were just talking a second ago. There's a betting site for, you could do this in the market. It's just more complicated, but how many rate cuts do you think the Fed's going to do this year? Cody, what was the magic number? It was 3?
Well, so they do it a little bit different. This is on a call sheet, KL. Am I on? You got me on?
Yeah.
Oh, okay, yeah. So this is call sheet. So they give you a bunch of different options. You can pick 1, 2, 3, or 4. But if you were to pick, let's say 2, it's 50 to win, quote unquote, win 167. So
I'm in for
pretty good odds, yeah.
So it's got to be only 2. It has to be 2.
Only 2, yeah.
So I want to be down for 100 on that one.
Oh.
Yeah, I'm going big.
Wow.
I think the Fed cuts rates twice, and that's probably an overstatement. What's the consensus now?
3 is the consensus.
3. So if you want to bet on Fed rate cuts, it's something to do, especially as the year progresses. Who wants to hear all this political stuff? Anyways, that'd be cool. So if, maybe post the name of that site. We're not affiliated with them or anything, but if you want to bet on it, that's where my bet's going. 2 rate cuts. Remember, the Fed only cuts rates in response to something. They don't just cut rates because they feel like it, right? We're going to hear from a lot of Fed members. Actually, there's 6 Fed members speaking this week. And then you also have Jerome Powell speaking in front of Congress, both sides, Wednesday and Thursday, right? And then after that, you won't hear from them. There's something called a blackout period, where leading up to the Fed rate decision, they all go silent. They disappear. I don't know where they go, but they disappear, and they won't do any conferences, discussions, interviews, whatever. So this is our last chance to hear from them coming up for the next rate decision. Most common responses, they're not cutting rates. Why would they? There's no reason to cut rates. So that is that. One other thing I'd like to point out, hey, if you are one of our clients, you know that we do lines of credit against your brokerage accounts if you like doing that sort of thing. We also have high yield savings accounts. 5 1/4 is where that stands at the moment. So if you're one of our clients, just want to point out that now there's an app for that it's called GS Select. And so if you want to have the app to see your savings and do all of that, you can now do it. If you want the line of credit against your brokerage account, you can set up all of that inside of it. We don't make money off of it, so this is not like a profit center for us. It's just something extra that we offer to clients. So no worries about old Dustin skimping a few dollars off the top. We don't play that game, and unfortunately, or fortunately for you guys, we never will. Anyways, let's take a look. Now, the stock market here, you may have concerns about where the stock market's at, where the economy is at. This is a weird time where most people are like, I don't think we're, running on all cylinders here. It just doesn't feel quite right. Yet the economy is doing better. The stock market is doing better, of course, as you can see that there. And so what do we do about that, right? The S&P on Friday, and the NASDAQ, by the way, hits new record highs. Oh, and I'll point out the Russell 2000 hit new 52-week highs. This is the futures market, but the index itself hit new 52-week highs. So it's a weird spot to be in, right? Because most of the time you're like, hey, things are great. I feel good. My 401k balance is going up. The economy's good. I'm not getting laid off. I have many job opportunities. Things are reasonably priced. So if I want to spend money on maybe, discretionary items, non-consumer staples like necessities, I could do that and I can have fun with it. This time feels a little different. I do want to point out, as we go into, let's look at the S&P here. So here's the S&P, obviously slight little down day today. I want to point out that this week is not known for being a strong week. It ranks in the very, very, almost perfectly at the bottom in terms of performance over this 5-day stretch. It happens to be a full 5-day stretch, Monday through Friday in this case. Over the last 10 years, every sector has a median return negative, right? doesn't mean we're going to pull back. It's very small, right? The S&P has a median performance of just a slight decline, minus 0.39%. Let's call it a 0.5%, right? So if we go into this week with just a little bit of sluggishness, know that that's more of a seasonal trait and not necessarily a sign that something bad is happening in the stock market, right? A great example would be around the holidays, right? Oh, the Santa Claus rally, right? That whole thing that we see there. Well, it's not necessarily that the stock market is undervalued and deserves to go higher. It's more that seasonal excitement that people get into. This is the reverse of that. So over the next 5 days, really 4 days from this point, if we see a little sluggishness, you want to think like, oh, here's the top, oh, great, we're going to get a pullback. And it very well could be, but it's also just part of that seasonal, like, spring break, like people aren't around as much, or getting into spring break and things like that. So I want to point that out. All right, S&P here today. Not really a day-to-day guy, but I do like to come to you guys and give you the updates. Today, rather quiet. We're all waiting for the Fed members to speak, right? We got Jerome Powell in front of Congress, both sides coming up Wednesday and Thursday. And so if you look at the market today, you just break it into a bunch of pieces. About 50% of stocks went higher, and about 50% of stocks went lower. Right, slight skew, but nonetheless, a slight skew to the downside. But nonetheless, it's called the advanced declines. So if you look at the advancers versus the decliners today, yeah, it was pretty even. Not really much there. There was some spread between, like Tesla had a really bad day, and B. Riley had a great day, right? So there's a little bit of a spread there. SMCI, right? Congrats, getting into the S&P there. So, just want to point that out there. Now, in the S&P, right now, there are 11 sectors in the S&P. So we take this index and we break it into things like tech. So only tech as a sector in the S&P. Real estate, right? The point I'm making is every sector besides real estate and utilities is currently overbought. Meaning you're paying a higher price than you would normally pay for 9 of 11 sectors. So if you are putting new money into the market, it's not necessarily a bad thing. It's just, that you're not paying the best price. You're not paying even an average price. You're paying a slightly elevated price right now. Remember cars, remember eggs, remember houses, right? When the random stuff at the store was just all of a sudden more. If you want it, you're just going to pay a little bit more. That's okay. Now, a week ago, last week, I could have said the exact same thing. So what does that tell you, right? It doesn't necessarily mean you're doing the wrong thing by investing in the market. It just tells you we are overbought. Most of the stock market is overbought at this point and historically does not stay at that level. So it's kind of like, you either pay these prices or you sit back and wait. Now remember when we went through COVID and everybody's like, or coming out of COVID, and we're like, I want to go on the cruise. And you had to pay that price. Still, they're rather expensive. You wanted to travel. You wanted to get out. You've been cooped up, right? It's time to get out there and do stuff. Well, that stuff costs more. Going to Universal Studios or Disney or Six Flags or whatever you're doing, that costs more. So you had to tell yourself, I'm either going to pay these prices and go do what I need to do, or I'm going to sit back and wait. I'm either going to buy that house now, upgrade, downgrade, whatever, or I'm going to sit back and wait. Some of you still sitting back and waiting. The stock market's doing the exact same thing here. It's a little bit difficult to get excited right here at this moment. Now, that's the same whether we're talking about the NASDAQ, the S&P, somewhat the Russell 2000. Look around the NASDAQ here, also known for being a underperforming week, the next 5 days. You got the Dow doing the same thing. It kind of got a head start on all this, being a little bit choppy near highs. Not really complaining or anything, but that's where that stands. So where does the attention go? Other places, right? So if the stock market is fine, it's just not like super attractive here, then where do you go? You go to things that look attractive. You'll notice that other areas of the market start waking up. And here's a great example. You got gold waking up for no real particular reason, but there's potential opportunity, right? And that hasn't happened for gold in a while. People that look at the other side, what did so well today? Your two best performing sectors were the most attractive out of all of them. They're not oversold or anything. They're just not overbought. So you got those 9 sectors doing well, but the 2 leaders today, real estate. Oh, okay, wait a minute. What did we just say a second ago? Utilities. Utilities was the best performing sector today. So the point I'm trying to make is when there's less opportunity in tech and all these things, like maybe Tesla's pulling back, maybe you're excited about that. First day of a new move, though. You don't do that. When all that's happening and it's like, I don't really want to put money there, where do you think the big guys, the big fund managers, the big mutual fund managers, they have new money coming into their fund? What do you think they do? Just buy it and then go play golf? No, they got to do well. New clients invest here. And we're like, well, okay, hold on a second, right? We don't want to just dive into the market because you put money in your account. What if we just put some in utilities? What if we start by putting some in real estate? Maybe small caps, right? You start a little bit. Why would you go large caps, right? As an investor, as a day trader or a short-term person, you got a whole different game plan there. There's still earnings season. You're happy as can be. Keep that in mind when you are looking to adjust, right? Maybe, like I said a second ago, you look at the stock market and you go, yeah, it seems a little too good here for the moment. We're kind of getting overvalued too. So keep that in mind before you just go S&P index fund, right? There's a time and a place. I'm not saying that's a wrong thing to do. I'm just saying, could you do a little bit better? Could you use your dollars a little more efficiently? And the answer at this point, I think, is absolutely. All right, let's talk about a waste of your dollars here. Bitcoin. It's the rocket ship. You better be quick. That's all I'm saying here. I don't follow it. I'm not playing it. I don't want a part of it there. I do want to point out that if we look here, you want to see the definition of volatility. Simple chart. Now, after today, this will be back to 0. So the move, we had about 6.75% to recover all of the decline that we had from during COVID there, the 2021. So if I could update this chart right this very moment, now that it's closed, we would have recovered everything. Just for a second here, take a look. This is pullbacks from highs. So 0 represents the highest point. And then, of course, there's a decline of some magnitude, and then we return back to the time we made prior highs. Look at the pullbacks in these. Bitcoin, 70% pullbacks quite frequently over the short life that we have of this. So if you're participating in Bitcoin and you're one of our clients, I don't want to hear about volatility. I don't have something that can fall 70%. I would never do that to anybody here. I would probably go to jail, to be honest with you. That's probably not allowed. But when you talk about volatility, there's not much more that you can, 70% pullbacks. But what does that tell you? Let's just break it apart for a second. If you love Bitcoin, you say, okay, maybe not right now, I want to buy it. Maybe not now is the best time to buy it. But I do want to buy it when it's cheaper. You know that a 2% pullback in the price of Bitcoin is nothing. It's a freaking blip on the screen. You wouldn't react to that, would you? Now, if Ford or Verizon or the utility sector pulls back 2%, there's a whole different story there now, isn't it? And I want to point out one thing. A little bit of a mania going on here, right? When you look at the chart, you go, oh, that's ridiculous. Who's going to buy that now? Yeah, I mean, that's it. However, AI stocks, anything wrapped around AI, still dominating. Let's just do a little fun here. So here's your Google search trends. What we did is we overlaid people searching AI stocks, crypto stocks, and meme stocks, because that was a thing, for a little bit it was a thing. People searching for AI stocks just dwarfing any searching for crypto, right? Look at the sort of spike back there during 2021. Oh, crypto was all exciting. Yes, we're going to do it. It's going to be great. We're dwarfing that. People are still searching for that. They want to be a part of it. And where do they go? The blue line is AI stocks. Whenever you search AI stocks, try it just for fun when you're out there. Help support this rocket ship of a trend. But when you search it, what do you think you see? Do you think you see SMCI? Maybe a little bit more today. Do you think you see the supporting crew? Do you think you see Snowflake? Right? Do you think you see some of that? Salesforce? No, you don't see it. When you search AI stocks or stocks benefiting AI, anything in that camp, you see NVIDIA. That's what all the articles are written about. And they just had their earnings as well. So What do you think happens to the average person searching? Well, I hear about this AI thing. I played with the Chat GPT and the others a little bit. I think I want to get involved. I want to invest in this. Where do you think the money goes? Here's your proof. AI searches relative to the price of NVIDIA. So blue is the search terms, right? That's just the quantity of searches. And you got your over here in thousands. And then over here, we have NVIDIA stock price. There is a hand-in-hand correlation with people who are new to the AI world going, let me put a few bucks in that, I don't know, seems like a good deal. Hand-in-hand correlation, look at that. So if you wanted to have sort of, maybe, leading indicator of whether NVIDIA could go higher or not, does the mania continue? And I point all that out to say, people are obviously interested in Bitcoin, but it's all the people that already know what's going on. They all wanted to play along. They all want to buy some more. They all think it's going to the moon and all that stuff, right? Now, AI is still dominating everything there. Everything. Okay, looking around, let's just bounce around a little bit. Bonds, barely not much going on here today. Oil did break above those highs. It's yet to really commit. Have we started a new uptrend here? This, to me, could be the beginning of that. We broke through. We managed to hold at the moment. You had OPEC, what do they call it? The OPEC Plus group actually, agree mostly to stay with their production cuts. You'd think that might help it out a little bit, but today, a little maybe buy the rumor, sell the news kind of event going on there. And then, of course, I want to point out volatility. Is there a lot of volatility in the stock market right now? You can look at that. Here's the VXX. It's an ETF you can use to look at it. No, there's no volatility. Nobody is scared of the stock market right now. The lower we are, the less volatile the stock market is. And there's an old phrase, guy that has a radio show down here, and I thought it was cool, so I'm stealing it. When the VIX is high, you buy. When the VIX is low, you go. That's not my phrase. The guy's name is, what's the guy's name? Oh my God. Yeah, he's an older guy. He's on the radio. He's grumpy all the time.
Yeah, I just keep wanting to say Rush Limbaugh, and that's not.
No, that's not it. That's not it. When the VIX is high, you buy. When the VIX is low, you go. And I remember hearing that as a kid driving around. I used to deliver menus to the restaurants, and I would listen to this guy. He's still out there. Son of a gun. Phil Grandy.
Yeah.
Phil Grandy. Yeah, Phil's gang, man. He's an oddball, but it was always fun to learn that. Anyways, so as you're looking around, there's not a lot of volatility out there, and so that's fine. No problems there. Let's do some stocks in the news here, and I'll take your questions. Because there was a handful of stocks in the news. I mentioned Tesla a little bit ago. Supposedly, their China shipments are down by about 20%. That was a Bloomberg report. That was enough to get the stock to start falling. There was a lot of news reports over the weekend coming out there, and that was, in fact, one of them. UPS, Barron's does, usually on the weekends, they'll do like one or maybe two or three like really important picks that they think are good. They'll do a whole write-up and, try to get you to buy the service or whatever. And they said, hey, UPS, right? If we look back through 2023 and you see that price weakness, that's what you see here, they said this is an attractive price. So their belief is that the economy is actually doing okay and will continue to grow even at a slower pace. Therefore, that would benefit UPS. There you go. I just summed it up for you, the whole thing. AT&T came out today and said, hey, every goal that we had, we're still on track. It's going to happen. The earnings guidance that we gave, we feel strongly about that. The money that we're going to reinvest and the money that we're going to use to pay off debt, we like that. However, what do we know? Come on, you've seen this before. Don't act like you haven't seen it. In an economic peak, right, which we assume we're in here somewhere, we're still growing, but not gangbusters, right? Investors don't want to see you investing for growth. They want to see you strengthening your balance sheet, which they are, paying off some of their debts, still is a lot of debt. And then they want to see you bringing back more money to shareholders, buying back shares, paying a higher dividend. You get the gist of it. So what happens? You look at AT&T and they go, hey, everything is good. Why is the stock going down? Because of what they're doing. They're essentially right now investing for the future. We don't want to see that. We want to see you investing for the future during after some sort of recession, some sort of weakness in the economy. We want to see you investing for the future when we're doing better, The economy is showing growth quarter over quarter over quarter, and it's just doing great. We're all out there buying and building and, obviously getting cell phones and stuff. So a little bit of a side topic there, but you get the gist of it. Macy's, once again, potentially has a buyer. It's actually a group of buyers there. I've heard of Arkhouse, Brigade Capital. I have not looked up there. They're teaming up together, and they're saying, hey, we'd like to buy Macy's for $24 a share. This has happened in the past. Macy's has not been able to get anything done, but so be it. And Spirit Aerosystems. I have to talk about this one. It's up 44% since we bought it. I did a video when there was that strike, and I went through the data and said, this strike is really not going to be anything interesting because of how they were striking. The completed fuselages that they had, is that how you say that? The completed fuselages that they had already ready to go as a backlog. I got so much grief on the old social media interwebs or whatever you call it for me going, you don't know. What do you know? I'm like, nah, I know I'm buying it. We're putting it on our clients' funds. That's what we're doing. And it's been a great, obviously great position to have. Now, Boeing has come along, says, life's not good for us. We didn't like what happened with that strike. Let's work together. Could we possibly buy you guys? Could we somehow merge you into one of our divisions? And wouldn't you know it, somebody knew it the other day, but up another 4% here today. So just want to point that out. Okay, one other thing. You might have been hearing about SMCI. Is this what Bitcoin's going to look like here soon? So up a lot today, basically up 20% on the day. They have done so well that they are going to now be in the S&P, right? And I just want to point something out. Have some fun with this at some point. Ready? So they're worth $60 billion. Is that a lot? I don't know. Let's take a look here. They say they're worth $60 billion. That means they are bigger than FedEx. That means they are bigger than Take-Two. They're bigger than Discover. They're twice as big as Discover. Their value at the moment. They're bigger than Dollar Tree. They're bigger than Humana, the insurer, right? 40 billion. Is that a little, does that bother you a little bit? They're bigger than the Hess Corp. They're bigger than Lennar. They're bigger than every REIT that's out there. I mean, maybe. They're bigger than General Motors, Crown Castle. They're bigger than Ross Stores, 3M, Ford. They're bigger than Ford by $10 billion. Come on. They're bigger than AutoZone, Lululemon, right? Pacer, Monster Beverage, FedEx. I mentioned them a second ago. Come on. Where are we at? Almost bigger than PayPal. Just think about that before you go chasing a $1,000 stock that just a minute ago was not a $1,000 stock, that had a market cap that would have been at the bottom of the S&P. So things I want to point out there. Hey, the other one, so SMCI is taking the place of Whirlpool in the S&P. That'll take place in a couple weeks. And then Deckers Outdoors is taking over for Zion Bank, right? Why does the S&P look like it's always doing well? Well, hey, when you put these two stocks in there, granted, they're not going to have like the biggest weighting ever, but hey, when you're constantly moving in stocks that are doing well and chasing them, then, geez, that might do the trick there, right? So $23 billion for Deckers Outdoors. Unbelievable, right? I get a little grumpy in my old age. You know what I mean? Yeah. Joseph Kelly says, if it beats Capital One, you prefer to use Jazz. 5.25 is, if I'm thinking you're talking about the high interest savings. Basically all that is, if you want to know the real secret to it, we don't charge for that either. The way it works is, so Goldman Sachs has Marcus, and that's the retail one. And they're like, hey, we're offering, whatever it is, 4.5%, 4.75%. Then they come to us and they say, hey, since you already have like a client base, we'll do 5.25. You can give that to your clients. That's how that works. Do we have a guess the Dow winner there, mister?
We do, and we have another one of Eric's clients winning again this year. So
hey.
Even them winning this year, starting to get a little embarrassing for you, but congratulations to Tom L. Tom L was your winner last week.
Need I remind you about Adam?
Oh, yeah. You got one.
We're going to catch up, Adam. Adam couldn't make it to Lexington. this weekend, but he's going to be there.
Oh, okay. Well, Eric still got the lead, so yeah, that's all that matters.
By what? Tell me, how many do I need?
It's 4-3. I can check that again.
Okay, I got this.
Yeah. Come
on, you guys. We're going to have a special afternoon meeting for just my clients. Well, congratulations, Tom. Did he choose the credit?
We're going to credit his account.
Smart. If you do win, or if you play and you're a client here, have us credit your Roth IRA. That's the trick. It's $100. I get it. But you can play as much as you like. But if we credit your Roth IRA, don't tell the IRS. But the way we credit your Roth IRA is a reimbursement of fees. You probably didn't even pay that much. But therefore, it doesn't count as a contribution. So technically, you can put in an extra $100, right? Cheese ads? What you been looking up, Eloy? I like it. Oh, you got cheese as well. Okay. Well, there's your Guess the Dow winner for the week. If you want to play, jazzwealth.com/guess the Dow, if you'd like to take a look. Okay. Also, I should point out earnings this week. Oh, tomorrow. Sorry. Earnings tomorrow. The ones that'll get the attention in the morning, probably NEO, right? They had some changes in production there. They're trying, you know. CrowdStrike will be after hours. That will get the attention. But you also have Target, Nordstrom, and Ross Stores, which SMCI would be bigger than all three of those combined at this point. So you can't tell the hint that I'm trying to give. Lastly, we'll do sector-wise. For being one of the weaker 5-day stretches for the market over the year, healthcare ranks as one of the worst performers, and then industrials as well. Real estate's in there, 1.6% average downturn, healthcare 1.2, and industrials 1.6. The worst of all of them is energy, and that probably explains a few things here today. Energy average decline, 1.84%. Median decline, 1.84% over the last 10 years. That is the performance over that 5-day stretch, if you're curious, right? Opinion on Pfizer looks good. You think it's going to hold? So Pfizer, what would you break a new low here today? Decent volume today too. Actually, that's one of those. There you go. So tomorrow, look what happened today. All the selling is just the past 4 months of people saying, this is fine. I can handle this. I'm willing to be in this range. But if it goes any lower, I'd like to get out. Look at the volume in the background. So you got a bunch of people just throwing in the towel. That's actually kind of awesome. It sucks for today, right? It's an underperformer today. But if tomorrow you start to see it recover back from that, good. It shows you that everybody that wanted to throw in the towel has thrown in the towel, and you have more buyers than sellers at this point. I know of a lot of people that have been eyeing this one, asking questions about this one constantly there. Yeah. I know. We'll see what happens. Okay. That's what I got for you here today. We'll be back tomorrow to do this all over again. Remember, we are campaigning for clients. So we'd love to have your business. Here is my take on why you should be working with Jazz Wealth.
The financial world needs somebody they can trust, and also somebody who is professional.
If you have a snowball in your left hand and one in your right hand, what do you have? Frosty's full attention.
Eric Powell is not professional. Eric Powell is a radical political insider, despite saying that he isn't. He also definitely has ties to the Illuminati. He's on the record being a radical West Coast elite.
So I actually lived in Los Angeles for nearly 2 years.
Let's hear that again.
I lived in Los Angeles for nearly 2 years.
Unprofessional, political insider, West Coast radical elite. Dustin Tibbetts is the Southern gentleman you need and a man of the people. Justin Tibbetts, a man that would never cross the line with a joke, and more importantly, always money first.
I'm Eric Powell, and I approve this message.